Good morning. Welcome to the B.F. Anderson Technical Report for October the 20th. The stock market is a device for transferring money from the impatient to the patient. So Warren Buffett is basically saying you have to be patient during bear markets, during difficult times, because the money's going to transfer to the people that panic to the people that don't panic. I thought this was an interesting quote from a book I've been reading. It said, at the Berkshire Hathaway shareholder meeting in 2013, Warren Buffett said he owned 400 to 500 stocks during his life and made most of his money on 10 of them. Charlie Munger, his partner, followed up by saying, if you remove just a few of Berkshire's top investments, its long-term track record is pretty average. So, in other words, Buffett had to be patient. He had to make decisions, and he would make investment decisions on 400 to 500 stocks only to find approximately 10 ideas. But that made him great. Now, I apologize for this graph. It's not exactly lined up, but what I wanted to talk a minute about here is recessions. Now, the yield curve, which we use on a regular basis, when the yield curve inverts, it usually projects a recession. So, we have to look up here. We've only really, since these inversions that we've had here, we've basically had two recessions. This is the COVID pandemic. This is the mortgage crisis, and then this would be the dot-com bust. Now, what's interesting here is that I'm seeing how deep the inversion is. Now, the inversion got deep again back here in 2000 during the dot-com bust. Then we inverted here prior to the mortgage crisis, and then we inverted here prior to the pandemic recession. But I really don't think there's any correlation to how deep the inversion gets because, basically it doesn't really reflect in the width of this line, which shows the length and the pain of the recession. But I think the thing that's really interesting about this is that if you go back pre-1950, 1940, we had many more recessions. And, here's the Great Depression back here. But since the Federal Reserve was developed, recessions have been not as bad and not as many. So actually, we could say it's because of the Federal Reserve, or we could say it's because of the type of economy we have now. But things actually are getting better, not worse. Goldman says retail investors are near capitulation as they flood billions into cash. Well, here is the volatility index. We're going to talk a little bit about volatility. I think volatility goes up, markets go down. So you can see here we're up in the 30 area. A reading up here would really look like a capitulation, but we are seeing a lot of volatility, which is not good. Now, Let's look at a historic example of volatility, and I want to set it up this way. This is Oracle. This is 1999. You can see here where the graph, in other words, one thing you have to realize about growth stocks is they're 2 to 3 times more volatile than the indexes. So when the growth stocks start to settle down like this, so you can see here back in mid 1999, Oracle stock got really quiet, very, very, very steady. Very, very steady. And then all of a sudden the market takes off into a new bull market and Oracle takes off. So what you're really looking for in a technical term is you got to use a weekly graph. You want to see at least 6, 7, 8, 9 weeks of sideways action where you have a base, where you've built a base. Now what this means is that the buyers and the sellers have come together and reached some form of an agreement. They're in parity with each other. And then you can see the parity continues. Then all of a sudden the buyers take over, and then you go into an uptrend. So low volatility is really an important factor to be looking at. Now, here's Amazon, this is a current graph. This is Amazon currently. But look how volatile it is. I mean, look at these big swings. It's just telling you that the sellers and the buyers just have not reached parity yet, and that's really indicative of a bear market. Now, the downtrend continues. We're looking at the NASDAQ here. The downtrend continues. Now, remember, we define the downtrend as we look at the most recent event, which was a new low, and then we're looking to see if we're going to make a new high, which we're not. So Basically, we continue in a downtrend, and that's just that. Here's the small caps. Now, the small caps are actually holding up the best, which is a risk-on type of index. So that's somewhat of a good sign. So as we see, prior here as the NASDAQ, breaking to fresh lows, downtrend continues. But then when you look at the small caps, they're kind of stabilizing a little bit more. So that is somewhat of a good sign. Now here's the S&P 500. Again, downtrend continues. We're below that lower moving average. Then just another way to look at it, this is the 200-day moving average, continues in a downtrend. And the index, you can see where we're trying to put in some kind of a bottom here. Probably going to get a big rally in here somewhere, but could be a sucker's rally too. You just have to be aware of that. The aggression index is not looking well. This is, what I've always said is that growth stocks are going to lead the next bull market. They always do. And this is a ratio of growth stocks to consumer staples. And you can see it's just not making any headway. Actually made a fresh low recently. Continues to look bad. The lower moving average is definitely turned back down again. The upper moving average is definitely in a downtrend. 3 economic indicators. We've now got that 10-year bond over 4%, actually at 4.127. So interest rates continue to move higher. And like I've said, I don't really think this market can get going until interest rates stop rising. Now here's the price of oil. You can kind of see where it's back, pulling back again, continues in a downtrend. And also the financial stocks are not being helped by interest rates very much. It's the financial stocks are in a downtrend. New lows continue to be too high. Now we are getting a little bit of divergence here, as the market continues to have trouble. Fewer new lows, but we want to see the new lows get below 40 for an extended period of time. Now back to interest rates again. We're going to keep a close eye on these corporate bonds. Now this is a HYG, which is high yield or junk bonds, whatever you want to call them. But you can see here they go into a downtrend. Market doesn't do well, then once the downtrend resumes into an uptrend, we go into a bull market. Well, you can see where we are right now. The junk bonds continue to be in a downtrend along with the S&P 500. So we want to see confirmation of the bond market because we think that that's going to be somewhat of a leading indicator as to the stock market. Trend strength continues to be 0 for the NASDAQ. Trend strength for the S&P 500 continues to be 0. Trying to get above that lower moving average, just can't quite make it. All right, top 5. This is a biotech or a pharmaceutical company called Iveric. And you can see pretty strong uptrend here. Got a big gap up on probably clinical trials or earnings. I'm really not familiar with the company yet. Just really not doing a lot of research on these companies because I think we're still kind of early here. Shockwave, you can kind of see where Shockwave, which is an interesting technology, is trying to consolidate in here. Now, I don't like this V here. When I was showing you the Oracle example, you really want that steady base, that solid base. Now, this is a daily graph and not a weekly graph. Biogen, another biotechnology, big gap up, failed, trying to rally again. I would just continue to watch. Marathon Petroleum, Marathon Oil. The oil stocks really are kind of holding up pretty well here. In fact, you can kind of see that stability coming in here where the buyers and the sellers are reaching parity. But then again, that you kind of got that V in there, which is not a positive. Here's Devon Energy, another energy stock. Again, you got that big V in there. However, it is trying to somewhat stabilize. So basically, the message I'm giving here is that we need to watch the price of the stock. We want to see, a trend. You want to see an uptrend. However, you also want to keep an eye on volume because volume gives you a clue as to what's going on with the institutional investors. But then thirdly, keep an eye on that volatility because volatility really is the problem right now. If you have any questions, please let me know.